Well, the Bank of England was acting under its financial stability remit, trying to stabilise markets, which they felt were getting disorderly and threatening various parts of the financial system, particularly pension funds. And we saw quite a bit of this type of activity during the global financial crisis, but we haven't seen that really happen since then. And the slightly frustrating thing for the bank with all this is that they really want to be reducing the amount of government bonds that they hold because they want to tighten monetary policy to respond to inflation. But now they find themselves, because of the state of the financial markets, having to buy more bonds before they start selling them back. So it's a very frustrating position for the bank. They're having to fight on two fronts. They're fighting inflation, but they're also trying to stabilize the financial markets, and the actions are not necessarily consistent with each other.
Andrew, the two big questions for the market at this point is what happens now with interest rates? Do we see the central bank press ahead with more aggressive rate hikes from here? And the other point around QT, does it resume the taper program later on this month as it had planned?
Well, you can argue that the Thursday decision last week, a week ago, it seems like a long time ago now, to raise interest rates by just 0.5%, started to make financial markets nervous. Obviously, the Kwasi Kwarteng's budget was the main factor, but the markets thought that there should have been a bigger rate rise, and I thought there should have been a bigger rate rise. And I think we should see something quite dramatic, I think, in November, possibly 100 basis points increase. I know the markets are expecting possibly even more than that. So the short-term interest rates are going to continue to rise. And once we've got through this period of volatility, I think the bank will continue with its policy of quantitative tightening, QT, or reverse QE, depending on how you look at it.
Andrew, is there a problem with the way that the Bank of England sets its interest rate policy? And this has all been about credibility, I think, as you pointed out, to financial markets, that UK PLC projects one message, whether it be from the Treasury or from the Bank of England. But it seems the voting patterns of every meeting have been so erratic that it's been very hard to actually get a clear picture of what the broad body of consensus is at the bank on inflation and interest rates.
Well, I think you're quite right, but this is a long-standing problem. The Bank of England has not really, or the MPC has not really had a consistent strategy since the global financial crisis. And you may recall back in Mark Carney's days when he entered office and he said he was going to be prepared to raise interest rates if certain conditions were met, and he kept on changing the conditions. And we've seen this repeatedly, that the MPC seem to be just looking at things too much on a short-term basis and not pursuing a longer-term strategy. If they had a longer-term strategy since the pandemic, they would have probably started raising interest rates sooner, in the middle of last year, and have got them to a higher level by now. And I think that would have put us in a better position to combat inflation.